Hey everyone, today I'm going to give you an update on our real money live traded swing trading portfolio and how it fared over the last 3 months to the end of February 2024 and also cover the years prior. Let's get straight into the returns for December 2023 as well as January and February of this year. I'll measure to the end of the week being Friday the 1st of March 2024 rather than using Thursday the 29th of February just to keep it simpler. So in that time, our Share Wealth Systems live traded US stocks portfolio outperformed by 2.14%, being up 15.02% for the 3 months compared to the S&P 500 total return index being up 12.88%. Even though it's important to gain small outperformances and also keep underperforming periods to a minimum, we don't manage portfolios with a view of only a few months or even a few years. It should be more like 20 plus years. Actively investing with a stocks portfolio is an infinite game, the main objective of which is to keep playing the game and do better than the alternatives while you're playing. And of course, you've got to enjoy the process as you're going along too. The objective is not to keep stopping and starting, because if you do, the adverse market periods make it really easy to become despondent and feel like a bit of a loser when things aren't going your way. Stopping when the going gets tough means that you miss out on great trading periods like we've seen over the last 12 months. From the 28th of February 2023 to the 1st of March 2024, our rules-based US portfolio was up a whopping 35.23%. Compare that to the S&P 500 total return index, which was up 31.5%. A great 12-month period for the S&P 500 for sure, but even better for the rules-based real money portfolio that's been managed since 2016 as an open book for our customers to learn from. We've always believed in transparency and like to show our results in real time, warts and all. Now let's compare these two returns to a balanced fund. As in previous videos, we use the Vanguard Balanced Fund VBIAX, which is where John Bogle, the founder of Vanguard, said for decades that he'd invested around half of his capital. For the 3 months of December, January and February, the Vanguard Balanced Fund was up 8.88%, which is 4% underperformance of the S&P 500 total return index and 6.14% underperformance of our US stocks mechanically traded portfolio. Over the last year, the Vanguard Balanced Fund returned 18.84%. A great return by any measurement, if not benchmark against what was actually possible. This is 12.66% underperformance of the S&P 500 total return index and 16.39% underperformance of our US stocks mechanically traded portfolio. We use the Vanguard Balanced Fund as a second benchmark for performance because it represents a 60% stocks, 40% bonds investing formula, which is how a massive amount of the long-term money is invested in 401ks and IRAs in the USA. The 60-40 mix is similar for other countries and their retirement funds around the world too. Next, let's have a look at the chart comparing the equity curves starting at the same time and the same base date on February 28th, 2023. The blue line is our real money portfolio compared to the red line, which is the S&P 500 total return index, and then the black line is the Vanguard Balanced Fund. The outperformance by our portfolio of the S&P 500 total return index over the last year is just over $5,000 and over $16,000 compared to the Vanguard Balanced Fund. Over time, you want that gap to get wider and wider between the blue line and the red line, although each is going to take their turns of short-term outperformance because nothing goes up in a perfect straight line. Balanced funds and target date funds, where 80% of people's money is invested for the long term for their retirement, will lag further and further behind the more that time passes. So coming back to comparing annualized returns, the S&P total return index has outperformed our portfolio over the last 4 years by 2.06% annualized. We had 2 sizable mistakes in the past 4 years that cost the portfolio some of its performance. So going forward, we're confident in making that up as the mechanical edge of the system plays out. And how did the 60-40 Vanguard Balanced Fund do? Well, over the same 4 years, its annualized return is 8.73%, which is some 5.88% annualized worse than our real money portfolio. And the last metric to keep an eye on are the annualized returns since inception of this real money live traded portfolio all the way back in January 2016, so just over 8 years ago. Our portfolio has achieved 12.68% annualized return over this period compared to the S&P 500 total return index growing by 13.89% annualized. That's 1.21% outperformance of the index over our portfolio over the 8-year period, or just over 8 years. What did the Vanguard's Balance Fund do over that same period of time? Well, it achieved an 8.72% annualized return, which is 3.96% annualized worse than our rules-based portfolio. Be aware, and this is an important thing to note, that 3.96% outperformance with our portfolio achieving 12.68% annualized compared to the Vanguard Balance Fund at 8.72% annualized over the 10 years means that for every $100,000 invested, you'll make an extra $99,000 profit. Okay, that few percent extra per year is a huge amount in dollar terms to your portfolio. And over 20 years, it'll be an extra $556,000 for every $100,000 you've invested. It's massive. It's basically double the profit. So $1,088,000 instead of just $532,000 in your portfolio. That's the power of compounding. It's the main reason to learn how to invest properly and achieve just 3 to 5% additional annualized growth over the long term. It'll make a huge difference to your portfolio over its lifetime. So that's it for today's update. And remember that past performance is not a reliable indicator of future performance, and that today's video is for education purposes only. If you'd like to keep up to date with this portfolio and get other market insights, please hit the like button or subscribe to the channel to get all the latest info as we release it. Until next time, when we delve into the markets again, I wish you consistent, objective, and peaceful investing. Bye for now.